Hi, welcome back. In this video, I'm going to share a formula that I use to filter out stocks for long-term investments. I'll be building a workflow to give verdict on stocks. If you are an active investor, you can modify this workflow as per your strategies. And if you're learning about stock market, this section will give you good explanation of basic concepts. Let's dive in. First things first, why do we need a formula to filter stocks? Well, the stock market is full of noise, with thousands of companies claiming to be the next big thing. But we do not want to rely on hype or speculation. We want companies that are fundamentally strong, profitable, and have track record of growth. That's exactly what this formula helps us find. So we need stock filters to avoid unreliable companies, focus on consistent players, and save time by filtering only strong candidates. Now, the first filter we will consider for our shares is that market capitalization should be more than $10 billion. Why the number 10 billion? Because if a company is worth or has valuations of more than $10 billion, that company will be considered as mid cap companies. They are relatively safe to invest as compared to the small cap companies, and also they provide higher returns than mega caps. So we will make sure our filter only picks stocks that are valued more than $10 billion. The next filter is sales growth. We are looking for companies that have consistently grown their sales by more than 10% every year over the past decade. Why? Because sales growth shows demand for the products or services. A company that is consistently increasing its revenue is likely doing something right. So the formula stands. Last year's sales or the sales available from the last numbers company put out minus the sales of 10 years ago divided by sales of 10 years ago, and this should be more than 10%. Now after sales, let's talk about profitability. ROCE measures how effectively a company uses its capital to generate profit. A good ROCE means that company is not just profitable but also efficient. We are setting the threshold at 15%. It should definitely be higher than the bank interest rate. The formula for this is EBIT, which is earnings before interest and tax, which will be divided by total assets minus current liabilities of the company, which should equate. Next up is promoter holding or insiders shareholdings. Promoters are essentially the owners or major stakeholders of the company. If they're holding more than 33%, it's a sign of confidence. And if their stake is increasing over time, that's even better. Always check for promoter holdings and it should be more than 33%. And finally, the most reliable metric, stock price growth. While other financial data can sometimes be manipulated, the share price rarely lies. If the 10-year average compound annual growth rate CAGR of the stock price is greater than 17%, it shows consistent growth. The formula is simple. Just check the price growth of the stock for the past 10 years and it should be giving 17% annual returns to be the least. And those are all the five filters we will use to determine if a stock is worth investing or not. In the upcoming videos, I'll build up workflow on N10 with those five filters, which will give us the verdict if a stock is worth investing in or not. But now I'll show you how to use those filters to see the stock list. We'll go to Screener website and it will generate a list which of stocks that abide by those filters.